Hello everyone, welcome to the Capital Gains channel. As Capital Gains, our mission is to provide traders with insightful financial coverage and spread our belief in conservative trading and investing. We believe with proper strategic planning and practice, financial markets can be a fantastic way to build wealth over time. So if you are new to the channel, please do subscribe so that you don't miss out future videos. So and also don't forget to check in our description, in the description below. We have two of our courses that we offer. That is the ultimate guide to forex trading, the basics. That is a free course you can enroll for free. And then we have the ultimate guide to price action trading. That one is a paid course. So as well as the two brokers that we use and recommend, the links are in the description below. So let's get on to today's video. In today's video, I'm going to show you a swing trading strategy that is for those who do not want to look at the charts for long. So what are the advantages of swing trading? You don't have to watch markets all day, unlike other styles of trading, that is the scalping in the intraday. And also you place fewer trades, meaning you'll be paying less in spreads. But it also comes with its disadvantages. Swing trading requires large stops, meaning to say you'll be risking a larger amount, but the good thing is you'll be also targeting a larger amount. So overall, swing trading requires a bigger account, but you can also a bigger account. There is no benchmark for a bigger account, because your bigger account can be my smaller account. So there is no benchmark for a trading for a bigger account. So so you should take note of your stop loss before you place a trade to see whether your account will be safe after it reaches your stop loss. So for this strategy, we will be using the daily time frame, and I encourage you, if you have a trading account that is less than 100 United States dollars, please use a lot size 0.01. But if your account is bigger than that, you can even use 0.02, depending on your analysis. Because what determines your lot size is your stop loss. Your stop loss is determined by your stop loss determines your lot size, and your lot size is determined by your analysis. So let's get into it. So for this strategy, we are going to require four indicators. That is, we are going to use the stochastics, the relative strength index, and two moving averages. That is moving average period 5 applied to close, and it should be exponential, as well as moving average period 10 applied to close, and it should be exponential. So let's insert our indicators. So when you want to set indicators using the MetaTrader 5 on PC, you press where it is written insert, then indicators, then under indicators you will find trend. This is where you can find the moving averages. Then you select moving average, and we are going to use period 5 method exponential applied to close, then color of your choice, that is style of your choice. As you can see, we now have a moving average period 5. Then you go on again, trend, moving average. This one on period, we are going to use period 10, and be sure to, and then method exponential apply to close. Style, your style should be different from the first moving average. So this one we are going to use black. As you can see, we now have two moving averages on our chart, that is moving average period 5 and period 10. Then again, you go on insert indicators. Then now we are going to oscillators, and then under oscillators we are going to search for relative strength index. Then the relative strength index should be period 14 applied to close, style of your choice again. As you can see, now we have this relative strength index, that is the RSI. what the RSI does is that it measures, for instance, this period 14, it measures the last 14 candles and determine the percentage of bullish candles, as well as bearish candles. So if you have more bullish candles than the bearish candles, then the moving average will move above 50. This 50 means that 50% of the move of the in this case, it means that 50% of the last 14 candles were more than 50% rather were bullish candles. That is why it goes above the 50 period. So let's also go on to insert indicators, then oscillators, and stage for stochastic oscillator. And then on percentage K period, you are going to insert 10. Then percentage D period, it should be 3. Then slowing should be 3. And then everything you can leave as it is. As you can see, we have our two moving averages, the RSI as well as the stochastics. So now going on to the rules of this strategy. Rule number 1 is we are going to use the daily time frame. Rule number 2, if you have a smaller if you have a account that is less than $100, please use lot size 0.01, and then let's now go on to the other rules. The first criteria for our short position, that is when we sell when the moving average is crossed. As you can see, they closed here facing down. This signals a selling opportunity. Then criteria number 2, the RSI should be above 50 but heading towards the below 50. So when it is above 50 is our sell alert. Then we wait until it crosses below 50. Then our stochastic should be both lines should be facing down. So as you can see in this case, our moving average crossed here, then the RSI moved below the period 50 here, and also our stochastic lines are facing down. So this was a valid sell entry. Then you can enter here. So when you can use you put your stop loss should be above the previous high. That is, in this case, we can have our stop loss here. So as you can see, our stop loss should be around 70 pips. That is $7 stop loss using lot size 0.01. As you can see, you'll be risking $7 for this trade. Then for our take profit, we can use the previous low. That is stop loss criteria number 1. That is, we use the previous low. So in this case, the previous low was here. That is the previous support rather. The previous support was here. And you could have begged, let's see, that is 168 pips, or almost 170 pips. So using a lot size 0.01, 168 pips would be, let me calculate. Okay, that will be $16.80. So you risked $7 to get $16.80. That is almost 1:2 risk reward ratio, which is not bad. So that is number 1. You can exit when we can place your stop loss at the previous support. That is when you are selling, or you can wait until the RSI reaches period 30. So in this case, it reached period 30 here. That is here. So you could have exited here, or you can wait until the moving averages are crossed back again. As you can see, they crossed here. As you can see, all of our take profits would have been hit. So if you have a bigger lot size, or if you have calculated your stop loss and see that your account will hold multiples of 2 lot sizes, that is 0.02, 0.04, 0.20, all those multiples of 2, you can the first stop loss, your take profit in 1 would have been at the support area. Then your stop loss number 2, you could wait until the moving average is crossed, or the RSI hit the period 30, whichever comes first. So in this case, you could see that waiting for the RSI would have been more profitable than waiting for the moving averages. So you can weigh to see which one comes first. Then let's now go for a buy to see a buy position. So let's see if you have an entry here. The moving average is crossed. Yes, they crossed. The RSA was below 50, then it moved above 50. That is also valid. The stochastics are pointing up. Yes, they are pointing up, so that was a valid entry point. Then you could enter here. Then your stop loss would be here. That is 54 pips, that is $5.40, using 0.01, which is the smallest lot size. So if your lot size, your account is bigger than that, than $10, then you'll be risking, you said what, okay, you said almost $6. So if you, let's say you have a $20 account, risking that will be too much risk, so you should stick to 0.0. But if you see that it is suitable for you to use 0.02 lot size or any other multiples of 2, then it's still fine. But please note that first take note of your stop loss before you place your trade. So let's assume you entered here, then your take profit in the 1 should be at the previous resistance, which was here, as you can see, and also it was hit this previous resistance. The stop loss would have been hit after how many days? 1, 2, 3, 4, 5, 6, 7. Imagine after 7 trading days, then your your take profit will have been hit. So in this case, we said you can, if you are using the method that is take profit 1, take profit 2, so after you have closed your first trade, you can, if you are using the multiples of 2 lot sizes, when the first take profit is hit, you can move your stop loss to your entry. That is the trade will be a risk-free trade, so you can move your stop loss to break even, which means even if the price is to come back at your entry, you will not lose any money. So then you wait for a second take profit, that is either the RSI to hit the period, the 70 period, that is the oversold, or the moving average is to cross. So in this case, the moving average crossed first before the RSI hit the period 70, and it didn't even hit it. So that is our take profit number 2. As you can see that you could have begged, let's see how many pips, that is 153 pips, which is not bad. Not bad at all. 153 pips using the smallest size is $15. So you can take the first one, you said $16, the second one is $15, so almost $30 on using 0.02 lot size. So again, let's see if you can find an entry here. As you can see, these trades they don't come every day, but whenever the trading opportunities comes, they are profitable, because we are using the moving average crossover, and it is being supported by the RSI as well as the stochastic for confirmation. So if you follow these rules and apply proper risk management, you grow your accounts. So as you can see here, first criteria was met here. The moving average crossed the RSI. Yes, it was above period 50 here, then dropped below the 50 line, and then also the stochastics is also pointing down, which was a valid entry. So let's see that. Okay, here we entered here after the close of this candlesticks. We enter our trade here. Then our stop loss would have been here, almost 114 pips. That's yes, 114 pips. That will be our stop loss. So that is $11.40. Our stop loss would have been $11.40. So some of you might be wondering, so how am I calculating the profit against pips? So if you are using, okay, first of all, you have to find the number of pips that you are risking or that you are targeting. So in this case, or you can even say your entry, if you are buying, if you are selling rather, your stop loss will be bigger than your entry price. So you can say your entry price minus your entry point. Then you find the number of pips. The difference will be the number of pips that you'll be risking. Then you say the number of pips that you'll be risking times. If you want to use lot size 0.01, that is will be risking 10 cents per pips. So you say number of pips times 0.10, then you get your amount in dollars. So this is the method that I'm using. This is simple mathematics. So now if I say that you'll be risking $11 in this trade, we believe you'll be risking $11. So you first take profit would have been this support area, that is, you'll be targeting 273 pips. So you'll be risking 114 pips to get 237 pips. You see how profitable this swing trading can be. 273, that will be, you'll be targeting 273 pips. That is $27.30. As you can see how profitable these trades can be. So the first take profit will be here in this support area. Then the second one will be either to wait for the for the RSI to hit the period, the 70 period, the 30 period, or the crossing of the moving average. In this case, this RSI hit the 30 period first, so we'll be getting 327 pips. That is $32.70. As you can see how profitable this can be. Now, if you are patient enough, could you have been waited for the moving average to cross? This will be this was a very profitable trade. So in this case, in our last example, as you can see, the moving average crossed, the RSI crossed back to the period 40, period 50, sorry, and also the stochastics are facing up. So that's a valid buy entry. As you can see, we can enter after the close of this candle. Then our first take profit will have been for the you'll be targeting this this resistance. As you can see, this resistance here, and it was also acted as support here. So you'll be targeting how many pips? That is 423. So that's $43.20 up to this period. And also you can see that this would have been still a valid trade, but you can close the first half simply because the RSI had hit the 70 period. So guys, this is our swing trading strategy. You can back test it, and also you can even modify it. So if you are, we also have two courses that we offer as Capital Gains. We have number one, the ultimate guide to forex trading. That is a free course. You can learn all the trading foundation, that is from beginning to end, for free. Then we also have the advanced course, that is the ultimate guide to price action course. In that course, you will learn all the price action trading strategies and techniques that you use. But that one is a paid one, is a paid for course. So but it's very cheap. You can check out the prices. The links are in the description below. And also you can, the brokers we use and recommend, you can sign up using the links below. So please, if you find this video useful, please do like and subscribe to this channel. See you on our next video.